My name is David Smith and I'm the lead fund manager on the Henderson High Income Trust. The trust dates back to 1989 and it was really formed from the merger of Henderson Highland Trust and TR High Income that were merged back in 1993 to create the modern day Henderson High Income Trust. The main objective of the trust is, as the name suggests, is to provide a high level of dividend income stream to shareholders while also maintaining the potential for capital growth into the longer term. So the trust invests predominantly in equities and we always trying to own a prudently diversified portfolio of both well-known and smaller cap companies. But we also have the ability to own bonds. Typically over the longer term we will have 80% in equities, 20% in bonds, and we can move that allocation up and down depending on where we are in the economic cycle. One thing I would say is that bonds should be seen in regards to the income generation ability of the portfolio, and certainly when it's set against the gearing within the trust. So where I can borrow cheap money and invest in a prudently diversified portfolio of relatively stable bond assets, it's a very nice way of generating that extra income for the portfolio. The investment style is very much bottom-up stock picking. You know, we're trying to find good quality companies with good management teams that may be overlooked for whatever reason by the market, so we get them at the right price and at the right attractive valuations. A key focus for us is definitely balance sheet strength and cash flow sustainability. It's an income trust, we need our companies to pay the dividend. So the focus is really on making sure those companies are prudently financed, they can pay the dividends, because ultimately it's not just about the dividend yield they can pay, but it's the fact that they can sustain that payment over the longer term and hopefully grow it as well. I think the trust really appeals to those investors that are looking for income. Clearly at the current environment, in low interest rates, low bond yields, it's a very attractive trust. But actually I think into the longer term, you know, dividend yield, dividend growth are the majority of a total return. I think it appeals for the income investor for the longer term.